Hi everyone! In this video, we're going to learn how to make journal entries. So let's dive in and take a journey through the exciting world of accounting. Today, many of the functions of accounting are accomplished with the use of a computer. Computer programs can help set up and track many different accounting functions. The key word here is help. If you do not understand the basics, you will get very frustrated. This video is for an entrepreneur who wants to keep track of his or her own business records, a college student looking for a little help with accounting, or someone thinking of working for a CPA practice. Accounting is something that you will find in every business, no matter what the size of your company or field of work. Accounting can help owners and management make better informed decisions. These decisions can help prevent a business's failure or, even better, lead to growth and prosperity. Stages in the accounting cycle. Picture the cycle as a circle that repeats itself again and again throughout the life of the business, just as the seasons repeat themselves each year. The cycle begins when a transaction occurs. Journalizing is a practice whereby every time a transaction is made, it is recorded. Each transaction brings about a change in one or more accounts: assets, liabilities, owner's equity, revenues, or expenses. At least once each business year, you will prepare a worksheet so that you can summarize these changes in balance sheets and operating statements. Many businesses will do this quarterly. You must make adjustments and entries for changes that are not supported by documents such as receipts or invoices. Then you will close the books in preparation for the beginning of the next cycle. The general journal is the daily diary in which each transaction is recorded or entered, and is also known simply as the journal. The double entry system. In keeping your journal, you work with written records such as vendors' invoices, customers' sales slips, records of charges, shipping papers, also known as bills of lading, bank deposit records, and so on. Each time you make such a record, you're making an entry. Entry is a term used to describe the recording of a transaction. The double entry system is where each transaction is recorded twice, as a debit to one account and as a credit to another. In order for books to be in balance, the total of debits in all accounts must equal the total of credits in all accounts. Thus, the double entry system provides a continuous check on accuracy. Making journal entries. To begin your journal, you enter the name of the business and the words General Journal. The left-hand column is headed DR, which is the abbreviation for debit, and the right-hand column CR, which is the abbreviation for credit. Since the column dividers resemble the letter T, this arrangement is called a T account. On the far left is a column for the date. Note that journal entries are not totaled. The data from these entries is totaled when a trial balance is taken, at which time the totals are transferred to the income statement and the balance sheet. A trial balance is a list of all accounts and their balances at a specific point in time. Debit or credit. Now you're ready to enter transactions. Before you begin, though, you need to know whether a given transaction should be entered in the debit column or in the credit column. Every entry you make in the journal will eventually be posted to a ledger account. To make the journal entry, you need to know whether a debit or a credit increases or decreases the kind of account it applies to. Understand the following rules until you become perfectly acquainted with the rules for using debits and credits in making journal entries. Assets increase with debits and decrease with credits. Expenses increase with debits and decrease with credits. Liabilities increase with credits and decrease with debits. Owner's equity increases with credits and decreases with debits. Revenues increase with credits and decrease with debits. Normal account balances. This table shows the normal account balance for each category of account, as well as how to treat a transaction. Since revenues customarily grow, the normal balance in that account is a credit. Expenses also grow, so the normal balance is a debit. A balance that is out of normal circumstance may signal an error. Each time accountants enter a transaction in the journal, they must go through the following thinking process. 1. What accounts are affected by this entry? Note that more than one account is affected. 2. Are these accounts assets, liabilities, owner's equity, revenues, or expenses? 3. Does the transaction increase or decrease them? 4. Does this information call for a debit entry or a credit entry? For example, the cash sales for this week were $8,000. You need to enter this transaction in the journal. To decide which accounts are affected, you use the following thought process. I know that the event involves cash sales. I know cash is an asset and sales is a revenue. I see that cash, which is an asset, increased and sales, a revenue, also increased. An increase in an asset calls for a debit, while an increase in a revenue calls for a credit. Compound entries. Compound entries are used when a transaction affects more than two accounts. For example, suppose your business purchased a $36,000 truck for $7,000 down and signed a note payable for $29,000. In this case, two lines are used to record the two credits. The total of the credits should equal the total of the debits. Journal entries for revenues and expenses. Revenues such as the income from the sale of goods or services add to the owner's equity account. For this reason, the revenue account is increased with credit. Conversely, expenses increase with debits and serve to reduce the owner's equity account. A helpful guideline is to remember that expenses are almost always debited. The exception would occur in the case of an overpayment. When expenses are entered in the journal, the credit is usually to cash. So here's a summary of what we went over so far. The first step is recording a business's transaction in the general journal. This procedure is known as journalizing. The T account was described as an expanded description of the double entry system. Also, you need to determine whether an item should be recorded as either a debit or as a credit. Remember, assets and expenses increase with debits, and liabilities, owner's equity, and revenue increase with credits. A normal balance is the side, debit or credit, that caused the balance to increase. Sometimes a transaction affects more than two accounts. When that is the case, a compound entry is made. An important key to remember is that the total amount being debited must equal the total amount being credited. Okay, let's go over some exercises. Journal for the Jones Company and journalize or enter the following transactions. On January 2nd, owner puts $10,000 in cash into business. So you would debit $10,000 to cash account, and the owner's name is T. Young. You credit $10,000 into the capital account to record capital contribution. On January 3rd, business paid rent expense of $1,000. You debit $1,000 to rent expense, and you credit $1,000 to cash account to record rent payment for January. On January 5th, business purchased supplies for $50 cash. So you debit $50 to supplies account, and you credit $50 to cash account to record purchased office supplies. On January 9th, inventory purchased for $900 on account. The key word here is account, not cash. Therefore, you debit $900 to inventory account, and you credit $900 to accounts payable account, not cash account, to record purchased inventory on account. On January 14th, sale of goods brought in $250 revenue. So you debit $250 to cash account, and you credit $250 to sales revenue account. This is to record sales from week of January 14th. On January 29th, owner took out $500 cash. Therefore, you debit $500 to the drawing account called owner's drawing account, and you credit $500 to cash because when you do a draw, you decrease cash. And this is to record owner withdrawals.